Question 1. Which of the following is not a requirement under the Affordable Care Act account for an insurance plan to be considered? A qualified health plan (QHP) on the health insurance marketplace. A. Must provide essential health benefits. A. B. Must limit out-of-pocket expenses for covered services. C. Must cover all health conditions without limitations for pre-existing conditions. D. Must offer coverage only to individuals under the age of 65. Answer: D. Must offer coverage only to individuals under the age of 65. Explanation: under the account, a qualified health plan (QHP) is required to provide essential health benefits. A. Limit out-of-pocket expenses for covered services and cover pre-existing conditions without exclusions. However, there is no age restriction for who can be covered under or mandates that health insurance plans cannot discriminate against individuals based on age, and people 65 and older are generally eligible for Medicare, not excluded for EAPs. Question 2. Scenario-based question. Mr. Williams is enrolled in a PPO preferred provider organization plan. He visits a specialist who is not part of the PPO network and is billed for the full amount of the service. What should Mr. Williams do? A. Pay the full amount and file a complaint with the insurer. B. Contact the specialist's office to ask for discounts since they are out of network. C. File claim with his PPO insurance company to cover portion of the costs. D. Pay the full amount without contacting his PPO insurance company, as out of network services are never covered. Answer: C. File a claim with his PPO insurance company to cover the portion of the costs. Explanation: in a PPO, members can visit out-of-network providers, but the plan typically covers a lower percentage of the costs compared to in-network services. Mr. Williams should file a claim with his PPO insurer, which may cover a portion of the out-of-network costs, but he will likely have higher out-of-pocket expenses than if he had used an in-network provider. PPO plans are designed to offer flexibility but with higher cost sharing for out-of-network services. Question 3. Which of the following is a key difference between health savings accounts (HSAS) and flexible spending accounts (FSAS)? A. HSA funds must be used by the end of the year or they will expire, while FSA funds roll over. B. HSAS have tax-free growth and can be used for medical expenses after age 65, whereas FSAS do not offer this benefit. C. FSAS allow higher contribution limits than HSAS. D. Both HSAS and FSAS can only be used for prescription drug costs. Answer: B. HSAS have tax-free growth and can be used for medical expenses after age 65, whereas FSAS do not offer this benefit. Explanation: HSAS have several advantages, including tax-free growth of contributions and the ability to use the funds for medical expenses after the age of 65 without penalty, though they will be taxed if used for non-medical expenses after age 65. FSAS, on the other hand, have a use it or lose it policy, meaning unused funds typically expire at the end of the plan year unless the employer offers a rollover option up to a limit. FSAS cannot be carried over like HSAS, and they do not provide tax-free growth. The contribution limits for FSAS are typically lower than those of HSAS. Both can be used for a wide range of medical expenses, not just prescription drugs. Question 4. Which of the following statements accurately describes the coordination of benefits (COB) rule in health insurance? A. The primary insurer must always pay for 100% of the covered services, and the secondary insurer will pay the remaining amount. B. COB rules are used to determine the order in which multiple insurers will pay claims when a person is covered by more than one health plan. C. COB rules only apply when a person is covered by Medicare and Medicaid simultaneously. D. If a person is covered by more than one health plan, they can only submit claims to the insurer with the highest premium. Answer: B. COB rules are used to determine the order in which multiple insurers will pay claims when a person is covered by more than one health plan. Explanation: coordination of benefits (COB) is a process that determines the order in which multiple health insurers will pay claims when a person is covered by more than one health plan. The primary insurer pays first and the secondary insurer may pay the remaining amount, but it cannot exceed the total cost of the services. COB helps prevent overpayment, ensuring that the combined payment from all insurers doesn't exceed the actual cost of the care. The rule applies to all forms of health insurance, not just Medicare and Medicaid. Question 5. Which of the following is a requirement for health insurance plans under the Affordable Care Act account with respect to essential health benefits? A. All health insurance plans must offer at least 10 essential health benefits which cannot be excluded or limited. B. Health insurance plans are not required to offer mental health services or substance abuse treatment as part of ABS. C. Essential health benefits must be offered only to children under 18 years of age. D. States may opt out of the ACAS requirement to provide essential health benefits. Answer A. All health insurance plans must offer at least 10 essential health benefits which cannot be excluded or limited. Explanation. Under the ACAT, all individual and small group health insurance plans are required to provide essential health benefits aid which consist of at least 10 categories of services, including emergency services, mental health services, maternity and newborn care, prescription drugs, preventive and wellness services, and pediatric care. These benefits must be offered without limits or exclusions, ensuring that all essential care is covered. States are allowed to define the specific details of the benefits, but they cannot opt out of providing the aids altogether. Question 6. Scenario-based question. Mrs. Robinson, who is covered by both Medicare and Medicaid, is hospitalized for a procedure. She receives a bill for the services provided. Which of the following actions should be taken to determine the correct payment amount? A. Mrs. Robinson must pay the full bill as Medicare and Medicaid do not coordinate with each other. B. Mrs. Robinson should contact Medicaid first to pay the bill as it is the primary insurer for hospital services. C. Mrs. Robinson should contact Medicare first as it is the primary payer for her healthcare services and Medicaid will cover any remaining balance. D. Mrs. Robinson should only file the claim with Medicare and Medicaid will not cover any part of the bill. Answer. C. Mrs. Robinson should contact Medicare first, as it is the primary payer for her healthcare services and Medicaid will cover any remaining balance. Explanation. In the case of dual eligibility, coverage under both Medicare and Medicaid, Medicare is considered the primary payer and Medicaid serves as the secondary payer. Medicare will cover its share of the costs and Medicaid will pay the remaining balance, subject to state-specific rules. This coordination ensures that Medicare handles most of the coverage and Medicaid provides additional financial assistance for the remaining portion of the costs. Mrs. Robinson does not need to pay the full bill out of pocket. Question 7. Which of the following statements is true regarding the role of the Arizona Department of Insurance in health insurance regulation? A. The Arizona Department of Insurance only oversees individual health insurance policies and does not regulate group policies. B. The Arizona Department of Insurance is responsible for enforcing the requirements of the ACA in Arizona and overseeing health insurance companies operating in the state. C. The Arizona Department of Insurance does not have any regulatory authority over Medicaid in the state. D. The Arizona Department of Insurance is only responsible for regulating health insurance premium rates, not claims or consumer complaints. Answer. B. The Arizona Department of Insurance is responsible for enforcing the requirements of the ACA in Arizona and overseeing health insurance companies operating in the state. Explanation. The Arizona Department of Insurance, DOI, plays a key role in regulating all forms of health insurance in Arizona, including enforcing the ACA's requirements, ensuring that health insurers comply with state and federal laws, overseeing premium rates, and managing consumer complaints. This agency works to ensure the solvency of insurance companies, protects consumers, and promotes fairness in the market. It also oversees Medicaid, OX, and ensures compliance with state-specific health insurance regulations. Question 8. Which of the following types of health insurance plans is most likely to offer the lowest premiums but the highest out-of-pocket costs for the insured? A. Health Maintenance Organization, HMO. B. Preferred Provider Organization, EPO. C. Exclusive Provider Organization, EPO. D. High Deductible Health PHE. Answer. D. High Deductible Health PHE. Explanation. High-deductible health plan insurers are designed to have lower monthly premiums but higher deductibles and out-of-pocket costs. These plans are typically paired with health savings accounts (HSAs) to help individuals save for the higher out-of-pocket expenses. HPPs provide lower premiums. They require the insured to pay a larger amount upfront for medical care before the plan begins to cover costs. These plans are generally chosen by individuals who are healthy and do not expect to have frequent medical expenses. Question 9. Which of the following statements about the Children's Health Insurance Program, CHIP, is true? A. CHIP is only available for children who are covered by private health insurance policies. B. CHIP provides coverage for children up to age 26, similar to the ACA's dependent coverage mandate. C. CHIP provides coverage for children in families with incomes too high for Medicaid but too low to afford private insurance. D. CHIP is state-only program with no federal funding. Answer: C. CHIP provides coverage for children in families with incomes too high for Medicaid but too low to afford private insurance. Explanation: the Children's Health Insurance Program (CHIP) is a joint federal and state program that provides health coverage to children in families with incomes too high to qualify for Medicaid but too low to afford private insurance. It is designed to cover children who might otherwise go uninsured. The program is available to children up to the age of 19. Some states may extend coverage to older children up to age 21. CHIP is funded by both federal and state governments, and each state administers its own CHIP program with federal guidelines. Question 10. Which of the following actions would be a violation of HIPAA privacy regulations in healthcare insurance? A healthcare insurer shares a patient's health information with a family member with the patient's written consent. B. An insurance agent discusses client's medical history in public area without the client's consent. C. Healthcare provider discloses patient information to other providers involved in the patient's care. D. An insurance company sends health information to third-party vendor for billing purposes with proper safeguards. Answer: B. An insurance agent discusses a client's medical history in a public area without the client's consent. Explanation: under the Health Insurance Portability and Accountability Act (HIPAA), healthcare providers and insurers must protect patients' medical information and prevent unauthorized disclosures. Discussing patients' medical history in public area without the patient's consent is violation of HIPAA privacy regulations, as it could lead to unauthorized access of the patient's sensitive health information. HIPAA mandates that health information be kept confidential and secure, only shared with individuals who have the proper authorization or need to know for the patient's care or payment purposes. Question 11. Which of the following is a primary benefit of a health savings account? A. TESA, paired with a high deductible health SAS are available to anyone, regardless of whether they are enrolled in an AHP. B. Contributions to an HSA are tax deductible and withdrawals for qualified medical expenses are tax-free. C. HSAS can only be used for covering prescription drug costs. D. HSAS allow individuals to receive reimbursement for medical expenses not covered by any insurance plan. Answer: B. Contributions to an HSA are tax deductible and withdrawals for qualified medical expenses are tax-free. Explanation: a health savings account (HSA) is a tax-advantaged account designed to help individuals save for medical expenses when paired with a high-deductible HELP AHE. Contributions to an HSA are tax-deductible, and any withdrawals made for qualified medical expenses are tax-free. This creates a financial incentive for individuals to save for their medical needs while enjoying the tax benefits. HSAS also allow funds to roll over from year to year, unlike flexible spending accounts FSAS, which may have a use it or lose it rule. Question 12. Which of the following is true regarding a preferred provider organization (PPO) health insurance plan? A. PPO plans require members to choose a primary care physician (PCP) and obtain referrals to see specialists. But PPO plans have a limited network of healthcare providers, and members must stay within that network to receive coverage. C. PPO plans provide flexibility by allowing members to see specialists and out-of-network providers without a referral. PPO plans offer the lowest premiums among all types of health insurance plans. Answer: C. PPO plans provide flexibility by allowing members to see specialists and out-of-network providers without a referral. Explanation: preferred provider organization (PPO) plans offer more flexibility compared to health maintenance organization (HMO) plans. Members do not need to choose a primary care physician (PCP), and they can see specialists or out-of-network providers without requiring a referral. However, seeing in-network providers usually results in lower out-of-pocket costs. PPO plans typically have higher premiums and out-of-pocket costs than HMO plans, but offer greater freedom in choosing healthcare providers. Question 13. Which of the following is an example of a scenario where the principle of insurable interest in life insurance applies? A. A person purchasing life insurance for a family member to ensure financial security in case of death. B. A business partner purchasing life insurance on their colleague's life without their knowledge. C. A person buying life insurance on an acquaintance to profit from their death. D. A person purchasing life insurance on a friend's life without any direct financial connection. Answer: A. A person purchasing life insurance for a family member to ensure financial security in case of death. Explanation: insurable interest is a requirement in life insurance, meaning that the policyholder must have a financial stake or interest in the continued life of the insured. For example, family members typically have an insurable interest in each other because the death of one could financially affect the others. This prevents individuals from taking out life insurance policies on people they do not know or have no financial relationship with, thus ensuring that life insurance serves as a tool for financial security rather than speculation. Question 14. What is the purpose of the Affordable Care Act? The CAP individual mandate. A. To ensure that only high-risk individuals purchase health insurance. B. To require all individuals to have health insurance or pay a penalty. C. To eliminate employer-based health insurance plans. D. To limit the number of insurers offering coverage in the marketplace. Answer. B. To require all individuals to have health insurance or pay a penalty. Explanation. The ICA's individual mandate required most Americans to have health insurance or face a penalty known as the shared responsibility payment. The goal was to expand health insurance coverage by encouraging people to maintain continuous coverage, thereby reducing the overall number of uninsured individuals. The penalty was eliminated at the federal level starting in 2019, but some states have implemented their own individual mandates. Question 15. Which of the following is a feature of a catastrophic health insurance plan under the Affordable Care Act? A. It covers all health care costs for individuals under 30 years old with no deductible. B. It provides low premiums but high deductibles and is designed to protect against very high medical costs. C. It covers only preventive care and emergency services, excluding other medical services. D. It includes unlimited coverage for prescription drugs with no deductible. Answer. B. It provides low premiums but high deductibles and is designed to protect against very high medical costs. Explanation. Catastrophic health insurance plans are designed to provide low-cost coverage for young, healthy individuals who want to protect themselves against very high medical expenses. These plans offer low premiums but have high deductibles. Once the deductible is met, the plan covers essential health benefits and there is a limit to out-of-pocket costs. These plans are intended to protect against worst-case scenarios, such as serious accidents or illnesses, but are not comprehensive in terms of routine care. Question 16. What does underwriting mean in the context of health insurance? The process of determining how much an insurance policyholder will pay in premiums based on their health status and other factors. B. The procedure for reviewing claims after a policyholder's death. C. The assessment of the value of health insurance premiums based on the total number of policyholders. D. The legal process for determining the effectiveness of insurance policies in court. Answer. A. The process of determining how much an insurance policyholder will pay in premiums based on their health status and other factors. Explanation. Underwriting in health insurance refers to the process by which insurers evaluate an applicant's health status, medical history, lifestyle, and other factors to determine the premium they will charge. Underwriters assess the risk posed by the applicant and decide whether to offer coverage and at what price. This process helps insurers assess the financial risk associated with insuring the individual and ensures that premiums are aligned with that risk. Question 17. Which of the following describes a key feature of the Medicare Part D prescription drug benefit? A. It provides coverage for dental and vision services. B. It is available to all individuals under the age of 65 who qualify for Medicare. C. It provides coverage for prescription medications through private insurance companies. D. It is only available to individuals who have already enrolled in both Medicare Part A and Part B. Answer. C. It provides coverage for prescription medications through private insurance companies. Explanation. Medicare Part D provides prescription drug coverage to individuals who are eligible for Medicare. This coverage is offered through private insurance companies that contract with Medicare to provide the benefits. Part D helps cover the costs of prescription medications, and beneficiaries can choose from various drug plans depending on their needs. Unlike Parts A and B, which are run by the government, Part D is administered by private insurers. Question 18. Which of the following best describes the role of a third-party administrator (TPA) in health insurance? A TPA processes insurance claims, enrolls individuals in policies, and manages the insurer's customer service operations. B. A TA is responsible for underwriting insurance policies and determining premium amounts. C. A TA acts as the insurance company's marketing agent, handling advertising and sales. D. EPA is responsible for administering the claims process for self-insured employers or health plans. Answer: D. A TA is responsible for administering the claims process for self-insured employers or health plans. Explanation: the third-party administrator (TPA) is a service provider that handles the administration of health insurance claims and benefits on behalf of employers or self-insured health plans. TPAs are responsible for tasks such as processing claims, managing member eligibility, and providing customer service. They do not assume the financial risk associated with insurance but perform administrative functions for health plans and insurers. Question 19. Which of the following would be considered an exclusion in a health insurance policy? A. A medical treatment that is covered when prescribed by a doctor. B. A specific medical condition that is not covered under the policy. C. A prescription drug that is included in the formulary. D. An in-network hospital stay covered under the plan's benefits. Answer: B. A specific medical condition that is not covered under the policy. Explanation: exclusions in a health insurance policy refer to specific conditions, treatments, or services that are not covered by the policy. For example, certain medical conditions, such as cosmetic surgery or experimental treatments, may be excluded from coverage. Understanding exclusions is important because it helps policyholders know which healthcare services will not be covered, allowing them to plan accordingly for potential out-of-pocket costs. Question 20. Which of the following is true regarding long-term care insurance? A. Long-term care insurance covers the cost of hospital stays for acute medical conditions. B. Long-term care insurance is typically used to cover the cost of custodial care, such as assistance with activities of daily living. C. Long-term care insurance is primarily designed to cover the cost of prescription drugs. D. Long-term care insurance is only available to people over the age of 65. Answer: B. Long-term care insurance is typically used to cover the cost of custodial care, such as assistance with activities of daily living. Explanation: long-term care insurance is designed to cover the cost of long-term services and supports, especially custodial care, which involves help with activities of daily living, adults, such as eating, bathing, dressing, and mobility. It is typically used for individuals who are unable to care for themselves due to chronic illness, disability, or aging. Unlike traditional health insurance, long-term care insurance does not cover hospital stays or acute medical conditions, but instead focuses on non-medical services. Question 21. Which of the following is a major advantage of a health maintenance organization (HMO) plan over a preferred provider organization (PPO) plan? A. HMO plans have more flexibility in choosing healthcare providers than PPO plans. B. HMO plans generally have lower premiums and out-of-pocket costs compared to PPO plans. C. HMO plans allow members to see specialists without needing a referral. D. HMO plans cover out-of-network care, a higher reimbursement rate than PPO plans. Answer: E. HMO plans generally have lower premiums and out-of-pocket costs compared to PPO plans. Explanation: health maintenance organization HMO plans usually have lower premiums and out-of-pocket costs compared to preferred provider organization PPO plans. However, HMO plans require members to choose a primary care physician (PCP) and obtain referrals to see specialists, and they typically only cover in-network care, which limits provider choice but helps keep costs lower. Question 22. Which of the following is considered a pre-existing condition in health insurance according to the Affordable Care Act? A. A condition that existed before the policyholder's insurance coverage began. B. A condition that only appears after the policyholder enrolls in insurance. C. A condition that is covered only during the policy's second year. D. A condition that is included under the plan's preventive care benefits. Answer: A condition that existed before the policyholder's insurance coverage began. Explanation: a pre-existing condition refers to a health condition that existed before the start of an individual's insurance coverage. Under the account, insurers are prohibited from denying coverage or charging higher premiums due to pre-existing conditions, which was significant change from previous insurance practices that could exclude individuals with certain conditions. Question 23. Which of the following is an example of coordination of benefits in health insurance? A. A patient submits medical bills to both a primary and a secondary insurance policy to determine which will pay first. B. A patient receives healthcare services from out-of-network providers, and both insurers contribute equally to the cost. C. A patient selects which insurance policy they want to use after receiving medical treatment. D. A primary insurance policy automatically covers 100% of all medical costs regardless of any secondary insurance. Answer A. A patient submits medical bills to both a primary and a secondary insurance policy to determine which will pay first. Explanation. Coordination of benefits is a process used when a person is covered by more than one health insurance policy, e.g., through both a spouse's plan and their own. It determines which insurance policy is primary, pays first, and which is secondary, pays after the primary insurance has paid its share. This ensures that the individual's claims are processed efficiently and avoids overpayment. Question 24. Which of the following best describes a high deductible health plan year? It provides low premiums but requires high out-of-pocket payments before the insurance covers any costs. B. It covers all medical expenses with no deductible for insured individuals. C. It has a low deductible and high premium costs. D. It is only available to individuals over the age of 65. Answer A. It provides low premiums but requires high out-of-pocket payments before the insurance covers any costs. Explanation. A high deductible health PHP is designed to have low premiums compared to traditional health insurance but comes with a high deductible. Individuals must pay a larger portion of their medical expenses out of pocket before the insurance begins to cover the CTIs are often paired with health savings accounts HSAS to help individuals save for these higher out-of-pocket costs. Question 25. Which of the following health insurance plans would typically have the most restrictions in terms of provider networks? A. Preferred Provider Organization (PPO). B. Health Maintenance Organization (HMO). C. Point of Service (POS). D. Exclusive Provider Organization (EPO). Answer B. Health Maintenance Organization (HMO). Explanation. Health Maintenance Organization HMO plans have the most restrictions when it comes to provider networks. They typically require members to choose a primary care physician (PCP) and obtain referrals for specialist care. Additionally, HMO plans only cover care provided by in-network healthcare providers except in emergencies. This creates cost savings for both the insurer and the insured but limits provider choices. Question 26. What is the donut hole in Medicare Part D? A gap in prescription drug coverage where beneficiaries pay a higher percentage of the cost for medications. B. The period in which a Medicare beneficiary cannot use their benefits. C. A requirement that beneficiaries must meet before receiving coverage for medications. D. A discount on medications available only to seniors under the age of 65. Answer A. A gap in prescription drug coverage where beneficiaries pay a higher percentage of the cost for medications. Explanation. The donut hole refers to a gap in prescription drug coverage under Medicare Part D. After a beneficiary has spent a certain amount on covered medications, they enter the donut hole where they must pay a higher percentage of the cost for drugs. However, under the ACAP, the donut hole has been gradually closing and beneficiaries now pay less for medications in this gap than they did previously. Question 27. Which of the following would not be covered under a typical health insurance policy? A. Emergency room visits for a serious injury. B. Cosmetic surgery performed for aesthetic purposes. C. Prescription medications for a chronic condition. D. Preventive care, such as vaccinations and screenings. Answer B. Cosmetic surgery performed for aesthetic purposes. Explanation. Most health insurance policies exclude coverage for cosmetic surgery that is performed for purely aesthetic purposes. However, if the surgery is deemed medically necessary, for example reconstructive surgery after an accident or to correct congenital defect, it may be covered. Emergency care, chronic condition medications, and preventive care are typically included in standard health insurance policies. Question 20. Which of the following best defines coinsurance? A. The amount a policyholder must pay before their insurance coverage begins. B. A fixed amount a policyholder must pay for each medical visit or service. C. A percentage of medical costs that a policyholder must pay after meeting the deductible. D. The total out-of-pocket costs a policyholder is required to pay for the year. Answer C. A percentage of medical costs that a policyholder must pay after meeting the deductible. Explanation. Coinsurance is the percentage of the total cost of a covered healthcare service that the insured must pay after meeting their deductible. For example, if a policyholder has a 20% coinsurance, they are responsible for 20% of the cost of the medical service while the insurance company pays the remaining 80%. Coinsurance helps share the cost of medical care between the policyholder and the insurer. Question 29. What is moral hazard in the context of health insurance? A. The tendency for individuals to engage in riskier behavior because they have health insurance coverage. B. The likelihood that a person will purchase more health insurance coverage than they need. C. The practice of insurers raising premiums after an individual makes a claim. D. The process of denying coverage based on a pre-existing condition. Answer A. The tendency for individuals to engage in riskier behavior because they have health insurance coverage. Explanation. Moral hazard refers to the idea that individuals with health insurance may be more inclined to take risks or engage in behaviors that they would otherwise avoid, knowing that their insurance will cover the financial consequences. This can lead to higher healthcare utilization and increased overall healthcare costs. Insurers and policymakers try to manage moral hazard by implementing measures such as copayments, deductibles, and coinsurance. Question 30. Which of the following is a key requirement of the Affordable Care Act to account for health insurance plans sold in the individual and small group markets? A. Insurance plans must cover only emergency care and preventative services. B. Insurance plans must offer coverage for the essential health benefits, including mental health services. C. Insurance plans are not required to cover pre-existing conditions. D. Insurance plans must offer coverage for all prescription drugs without a limit. Answer. B. Insurance plans must offer coverage for the essential health benefits, including mental health services. Explanation. Under the account, insurance plans sold in the individual and small group markets must cover a set of essential health benefits. These benefits include emergency services, hospitalization, mental health services, maternity and newborn care, prescription drugs, and others. The goal of the account is to ensure that all Americans have access to a minimum level of health coverage, including essential health services.